investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom, how are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. As Tom would say, TGIF. It's going to be a good weekend. We had Larry live trading earlier. That went quite well. You can check that out if you would like at TFNN.com. Right here on the front page. Essentially, that's second and fourth Friday of every month. Yeah, it was a pretty solid day. If you are a Fibonacci 24/7 subscriber, just like Larry, you're like watching us on YouTube, really recommend checking that out. For the product price, you get two live trading sessions. Again, second and fourth Fridays. So essentially you go to the fourth Friday of this month and the second Friday of June. Okay. Man. 0.08%. We're flat right now in the SPY. Your composite, 0.13%. And we've really been flipping, right? Just on either side of flat in both of these indices. Dow Jones Industrial off about 0.1% at 41,329. And you get those Russell futures off 0.05%. Dollar coming down a little, coming down a little bit, but we're up above 99 area, trading at 136 in the DXY. Bitcoin continuing to run. I did open up a little bit, a small position in BITU, that's ProShares Ultra Bitcoin ETF, just to capture some of that gain. I probably do see a traversal back to around 107,000, 110,000. You had a lot of liquidity. This is really driven by kind of like excess liquidity globally, right? And if you can anticipate increases in that, that is usually what you're going to see, the time you're going to see Bitcoin move up, right? Of course, you've had a lot of institutional buying as well. Some of the Gulf Arab states have added money into it, Swiss through MSTR, BlackRock adding to their ETF. So, there's a lot of positive pressure right now for Bitcoin. Now, again, as we all kind of know, if things get shaky at any moment, this can be kind of aggressive regarding its movement to the downside. But you have a lot of institutional acceptance right now of Bitcoin, and that will probably stabilize it to some extent. You kind of take a look at some of these weird little equities, okay, and journey with me to just the utterly bizarre. We're gonna look at BTCS, okay, this is up 51.48%. Remember we spoke about this yesterday? Okay, this thing rips usually, and I don't have the ability, maybe I can try to pull it up over the break, but you overlay Bitcoin with BTCS and then another equity that we'll go over as well, and you see these two equities rip along with Bitcoin, probably a day after or so when you get a big movement. This, of course, was a nuts kind of movement. People are remembering this, so they're trying to get back in. Get a little exposure. Of course, 50% is not bad. I looked at this thing earlier this morning, and it was like 3% to the upside, and I was like, I don't even know, man. What's the point? And well, look at that, right? But again, this is like I can't even really fully tell you what they do. It's something to do with Ethereum, supporting different protocols on Ethereum. I believe there's some mining going into this as well. And, you know, I mean, if you don't know what a company is really doing and it's not super clear, then, you know, you don't really want to get exposure. But these things, if we're looking at chart movements, this thing rips alongside Bitcoin, which is very bizarre. Then taking a look at this one too. This hasn't woken up yet, but BTCT, these guys are definitely Bitcoin miners. Okay, you can see a similar kind of pattern, although we are not getting the same kind of movement that you saw with BTCS. And take a look at that far right side of the tail there. I mean, obviously you see the gap up today, but even the day prior. Whereas if you can remember this, snapshot that in your mind, and we go back over to BTCT, you can see there was some kind of similar movement, right? You're not necessarily seeing that. We take this to a daily for BTCT, because this is when I was like, okay, all right, you missed the boat on BTCS. And again, definitely would not recommend anyone that I care about buying any of these, but it's kind of interesting just to see these things. There is a really strong ceiling, really right above 420 here, okay? 422, 423. It touches that, you sell right off immediately. So I don't know if someone's holding this and they have a sell order at that level. If that's the case, then you don't know how many shares exist there, right? I mean, the thing could just keep rejecting anything above 422 for quite a while. But that gets over and it does the same thing. You have insane kind of rally potential in this. This is the depths of degeneracy and high speculation, of course, right? This is a Chinese crypto miner, so that's something to keep in mind as well. Why does this squeeze, right? I mean, you look at this thing, you're trading at 188 up to 2658. You take a look at BTCS, which seems to be a little bit more legit of a company. It only goes up to 541, from relatively the same price, right? It's because the float, obviously, as you could probably guess, is just so much smaller in BTCT. So these are really kind of bizarre things, but the reason why I'm really bringing this up is because, again, I really recommend probably not doing this because it just is unbelievably risky, and you can see how aggressive the movement to the downside is in these two equities. See, watch, we're going to get up to like maybe 420, 422, and then it gets rejected. It's very weird. But my point in saying this is this same kind of strange behavior that we saw before this major sell-off, right? For the two major sell-offs that we had earlier this year, is now occurring again, right? A bunch of people spending money on extraordinarily speculative things. Like, does BTCS really super benefit from Bitcoin being that high? Not in the way that it's moving, And, going further with that, I mean, look at Tesla. We're up 4.64%. The thing, it's just like a desire to get 300. And, what I've been, hold right there, because we'll talk about this. The behavior in the market is like nothing ever happened and we're all good to go. So folks, stay right there, we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits. The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Look at this thing. This is wild. This is 703%. This is Chinese. Some of the Chinese companies are just racking today too. What was the other one? Zekin. Just do like pipe fittings in China. Yeah, okay. So so that's the answer, right? I mean, these is the same thing. Bitcoin. 703%. What do you think happens after that? Right? And I don't know. It's just, this is the same kind of like behavior, right? That we were seeing before this major crash, right? Like in the massive euphoria that we were having beforehand. I'm not saying it ends the same way by any means, but you get Tesla going up $300 to $300, up 4.8%. They have competition with their Tesla cars. I don't know. It's kind of exhausting a little bit, I think. But again, you can't argue with the actual price movement. I just get nervous that we're getting a little intense. I mean, same with Lucid, right? You're up 9.31%. This is really good volume. They had, what was the story with them? Like, it wasn't like they're earning, they kind of missed revenue estimates. Okay, so I mean, right. So their loss per share was better than anticipated, right? So they posted a point. Let's see here. A quarter loss 0.24 versus the consensus estimate. Okay, so they lost a little bit more. Excuse me. A quarter to go, they did a little bit better of a 0.22 loss versus a 0.26. Revenues down, and then so they get a bump to the upside by offering a $20,000 discount on their Air sedan. Okay, maybe that does drive sales and drives adoption to some extent, but this is an extraordinarily volatile stock. I think in an industry that has some major headwinds, I mean, not just like vehicles, but electric vehicles in and of themselves. So, maybe eat the loss at this time to get people into their cars because it might be a better option price-wise if people still want to get EVs, and they can kind of weather the storm. They're not horrible, right, balance sheet-wise in any way. They did have higher deliveries in Q1, which is nice. This is Lucid. I think a 28.6% increase year over year. So people do want the vehicles. Taking a look at Rivian, same kind of deal. Their deliveries were up a little bit. It's up 5.59%. But I think that this industry has headwinds, and I'm not sure why the behavior is acting like this. Right now, there is some kind of push to the upside in some areas, right? I mean, you're looking at the SPY, you had a nice movement to the upside yesterday. We're kind of sideways right now. This is toppy almost, this kind of patterning, right? With the deal with the UK, okay? I don't think that the deal with the UK really matters at all. It's to sell them beef, sodas. They can sell us cars, 100,000 units, I believe, is what it is. But I don't think they make vehicles. Yes, the British auto industry expressed excitement about the deal. Okay, oh my goodness. Which allows the UK to export 100,000 cars to the US at a 10% tariff rate and effectively removes national security tariffs. Yeah, right. This is the American Automotive Policy Council president. He says, the U.S. automotive industry is highly integrated with Canada and Mexico. It's not the case for the U.S. and the U.K. And additionally, the U.K., we had a trade surplus with them. So, I don't know. All of this seems kind of strange. I mean, the market didn't really respond in a super positive way, right? It seems like things have lightened a little bit. Some of the conversation around it is like great deals are being made. You still have, at least the last headlines we saw, that the Japanese discussions with the U.S., if there even were any, were kind of deteriorating. I mean, the Japanese didn't like whatever the Americans had to say. I've not heard anything with the EU, and you keep getting comments by Trump, with this, right? Like, 80% tariff on China seems right. I mean, that's still effectively, non-trade at all. So, I don't know. I just feel that there's a lot of, just weird movement into this. And I mean, check it, right? You have the 10-year, it is returning back to the upside. So, I mean, people are selling off the treasuries, whether or not they're, half of that is going into, or portions of that are going into like Bitcoin, if they're going into cash. I mean, municipals are seeing big inflow. That should tell people something as well, that there's some kind of positioning here. But then we're doing risk on, and not even just like risk on in the sense like we just buy equities, they're intense equities, like Tesla, like Lucid, like Rivian, right? That are very strongly highly growth. So I don't know. This is just a very kind of bizarre market, I feel like, and with the ideas of like buying into stuff and holding it, I think a lot of things are kind of strange, right? Now, if you look at things like TSM, they had great fourth quarter, and this is, I think, a little bit what's happening, right? TSM, okay, they had good first quarter deliveries, right? You're up 1% in this. I think a lot of that is like front-loading tariffs. I mean, it definitely is. This industry is obviously going to be very strong regardless because this world is going to be built on it. Let me see here. Yeah, revenue jumped 48% in April. The main chipmaker, reported monthly sales of $11.6 billion. That is wild. Compares with the average analyst estimate, which is a 38% increase, right? So we're looking at 48 to 38%. And I think, again, this is just kind of front-loading. Like, people are concerned, right, about what this kind of uncertainty is going to do. So I don't know, it just still seems like uncertainty is extraordinarily strong. And that's kind of my take on it right now. Now, I can compound this kind of sentiment with like looking at things like QBTS, okay, D-Wave Quantum. Okay, nice quarter, relatively speaking. You're trading at $3.1 billion. And you have revenue of 15 million. Okay, now this is growing, which is nice. Okay, but and the gross profit is nice for it as well. But I think this is just like still the same headspace as what it was before all this happened, and I don't know if that's the proper way to do it. Now, of course, the economy is still strong right now, and we see that with what the Fed's saying, and unemployment is still at okay levels. There is fear of more unemployment and fear of more inflation, but those data points need to come out to see how to operate. So I mean, there's that argues for this kind of stuff, but I don't know. It just seems a little bit weird to me. So folks, stay right there. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, welcome back, everybody. It's Jacob Troop, watching Tom O'Brien show. Got about half the show left here. Yeah, I mean, I think I've like just kind of made my point on it at least. Rigetti's up as well. Again, $2.9 billion, $3 billion company, not making too much money. Now the growth is still there, which is awesome. We'll just see what the actual breakout is. Let's check on our old friend Qubit. There you go, of course. You're at 0.24%. Yeah, and I mean, this is kind of doing essentially what we said, right? The floor really in this company should be much, much lower. But you have so many people who probably bought up in here and they're just going to hold. I see that with a lot of like companies that went through a pump and dump phase. This is a very standard way for the chart to kind of end up for it. Looking at companies that I don't think are ridiculous. Trade Desk, okay, you're up 18.54%. I have a buy for Trade Desk in around 69.50. If we get back down to that level, they did phenomenally. Okay, remember what we were talking about yesterday? It is unfortunate we didn't get in, but that's fine. I mean, the growth that they presented and the way they recovered from last quarter, which saw this massive, just unbelievable drop, which we were kind of assuming was a little bit of an overreaction. We still need to get kind of back to that price in the drop and then see what happens. But they did even better, from this quarter, right? So if you kind of just remove that in a sense, now that's not the best way to do, not the final way to do analysis, of course, but point being is that they're strong and they're growing on track for the valuation that had been at for quite a while. Of course, things are still uncertain, so I don't expect it to rally right back up there. But this is a very strong company, okay? And remember what I was saying yesterday is we're gonna have to see if they can actually get Kokai, which is kind of like their AI analysis software for their clients. These are big companies that are trying to understand how their ads are doing. That transition has really worked quite well. Okay, remember that was really what a lot of this gap down was, is that the adoption and the rollout was a little bit difficult, right? And then of course it doesn't help that, this is the area where things really started gapping down in the market. Let's see here. Yeah, so revenue was up 616 million, up from 491 million a year ago. Net income rose from 31.7 million to 50.7 million. Yeah, I mean, the growth is still here for sure. And going forward, they raised forward guidance, which was massive. Like I said, 69.50 is where I kind of want to buy this, and I just want it to kind of come back a little bit further into this gap for it to go off. But man, what a strong comeback for this company. And again, I mean, we were seeing people are not slowing down on the advertising right now, which is very solid. They also bought a new company called Sincera, which again, just kind of like advertisement analytics. Again, this is just more value added for everyone. Let's take a look again, and I mean the beating the estimates is massive too. So sales up 25.4% year over year. Again, that gives you the 616 million. Guidance for next quarter's revenue was at 682 million. That's 0.8% above average analyst estimate. Non-GAAP profit is 33 cents per share, 33.2% above what people were anticipating. I mean, it's a huge. Adjusted EBITDA is a 33.7% margin. That beat, everything's beating. Free cash flow is up majorly. You're trading at 37.3%. So they knocked it out, right? And this is what this company has always kind of done, right? They really knock out earnings quite a bit. They just had a slip up last time, a little bit of an overreaction. We still got to build a base now at this point, but I think they did very well, and their growth, I'm sure will continue to be very strong. Talk about a little bit in the ad sector, and it's not in the same exact way, of course, but Google, right? This is a really interesting thing that's occurring. with this, and I wonder how it shakes out. And I don't have a kind of a formulated opinion on this yet. But you're taking a look at Google. You obviously have this massive bar to the downside. You're down even further today. Okay, well, 0.93%. You're still above the low on the wick here, but this commentary that people are having that, listen, like these LLMs are going to take over Google search, right? Google makes a ton of money from this as well. They're right. I barely use Google. I say barely. I use it significantly less than I have in the past because of things like LLMs, right? I mean, I usually use Grok because Grok has nice access to the internet, and then it'll link the kind of articles and whatnot. Obviously, people like Perplexity, all that kind of stuff. But that is 100% going to be the way to do this. And you're talking about things like Web3 and even beyond that. I mean, the idea that probably in the future you're going to open up your computer and you'll have something like Grok baked into it, I mean, forget Google and all that kind of stuff. It's not necessary, right? At least for the search wise. So I don't know how they pivot from there. I don't, talking like this, I mean, it sounds like it could be, very devastating for Google. Now, of course, they have other lines of revenue, but that is their predominant thing, right? And, I think more and more people, right, in younger generations will use LLM to kind of ask questions and search the web. And it makes sense, right? I mean, Google search has been broken for a very long time, right? Where you just try, it's the same issue that YouTube has, Like you want to look for like a specific thing and it's not really going to give you that thing, right? It's going to give you someone's commentary on it. It's going to give you whatever, the ad is at the top. And it's a very aggravating experience. This is a thing a lot of people actually do speak about online too. So I'm not alone in saying that like the quality of these searches has declined pretty significantly. Additionally, like you look up Google and ask a question, it'll give you an AI summary at the top. Yeah, I mean, that's hit and miss with how accurate that is. At least with things like Grok, it does give you the actual sources, right? You can direct Grok and say, hey, I want you to only use primary sources, like if you're asking up a question for something in health or some scientific kind of commentary, whatever it might be, and it does that. And of course there are issues with the thing, is there's always going to be with these kind of platforms, but I can be a Luddite sometimes with some of the new technology. Like my phone is from like 5-6 years ago, right? And if I'm using searches like that, then we're gonna probably see a lot of that. So folks, stay right there, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, welcome back, everybody. Jacob Shoup watching the Tom O'Brien Show. Let's take a look. So, Kickoff warns that if Iran talks on there are productive, that they won't continue and we'll have to take a different route. Yeah, hopefully that does work out. Kickoff is hilarious. He's got like that. I don't know how to explain kind of what he gives off. But I watched this video of him in France, and he was sitting in like Palace Versailles, and he's like, this reminds me of Mar-a-Lago, which was an awesome comment. And the faces on the French were great, but he's kind of got that vibe to him, right? Where like you can't I don't know a lot about him, nor have I seen much after that, but he's kind of got that funny guy vibe, which is not always a horrible thing whatsoever. Taking a look at some of the mining new companies, CCJ continuing to do pretty well, up 2.81% right now. I believe overall we're about 4.5% up on CCJ, so that has been decent thus far. UUU off 0.11%, but that's okay. Still holding pretty well. MP coming down. UEC, that's fine. I'm glad for people who hold UEC are up 1.97%. Oklo ripping yet again. And again, I think a lot of this isn't, oh wow. I mean, that was just at the end of the day too. Draft executive orders aim to speed construction of nuclear plants. The potential actions could include overhauling the NRC and leaning on U.S. military deployed. Okay, so this just came out. That's what I'm saying, people. Now, okay, heads up again with what, see, this is gonna do it again, okay? This thing rips up with these kind of headlines, and you just gotta be careful, Let's just even pull this out further. Okay, no, I want to see it better. Okay, I mean, this actually has held quite well. You get this nice movement to the upside and the stabilization a little bit higher from the news we were talking about with that leak via Axios, I believe, if that was the outlet. But listen, I mean, this thing's going to rip again. A lot of these things rip. You just got to be careful, okay? What have we always been saying with especially things like Oklo or your nanos or whatever it might be, when you get headline rips, okay, you've got to sell those and you come back, try to add a little bit more. Again, that's just kind of a trading plan with it if you want to do day-to-day stuff like that. Look, we got UUUU coming back up right now on this kind of news. This is what we've been waiting for a little bit. Now, for things like CCJ and like Quad U and like UEC, I think they're well positioned. The ones you've really got to be careful of are going to be these kind of more speculative reactor designers, okay? But you can see phenomenal movement in these companies on headlines like that. You got Harmony up 3.38%. You got the GDX up 2.72%. Vista doing quite well, staying above 100. Goro coming down. again, cautious with this one. It doesn't seem like they're going to maybe have enough money to continue operations. They're only operating at like half capacity right now, which they've cut down from that just because of the costs, So that is something to keep in mind with Goro. Steel Dynamics up 0.59%. This has really been outperforming the other companies as well. Same with Nucor. They're down. And then Cleveland Cliffs has been in a tough spot as well. You're down even further in Cleveland Cliffs, right? You're getting close to this low of the year to date. This is this probably warrants Cleveland Cliffs this kind of movement down, and I love these, because a lot of times these can be very reactive and not always for the best of reasons. I mean, we're kind of talking about Eris. You're up 4.61%. See what I mean, right? When this came down, I was kind of remarking that this is a little bit oversold, given their dominance in the Permian Basin and kind of what they do. And we have had a nice gap up both days with that. This seems pretty solid for the equity, especially considering what is, the kind of forward guidance we've been looking at. Really, lack thereof for Eris, but this is a very dominant company. It's going to be in there for sure. It's of course tied to how oil prices operate as well, right? But I love this kind of stuff, right? Because people get spooked, and it's not always for good reasons, and that's where you can get some really good, quick guerrilla returns. Taking a look at, let's go back to Cleveland Cliff. Yeah, I mean, they've really been dumping a lot of people. From the headlines I have been seeing, and I haven't peered too deeply into this, they have some kind of tough stuff going on here, right? And I mean, this was a dip, really a day after earnings. They're, again, cutting people, so we'll see what happens with Cleveland Cliffs. Really, it's sad seeing Nucor not really take the way that we were kind of hoping it was going to take. Obviously, like longer term for Nucor, this is the most dominant steel manufacturer, right? So if we get any time where, can we really see like a nice movement forward of development, and in a way, like Trump can be that. It is crazy to say, but we were only like less than 5 months into this thing, right? We've got, almost 3.5 years left to see how this whole thing can develop out. Of course, I do think Trump kind of sees himself as like, or maybe emulates some of the guys back in the Gilded Age of America, and a lot of that has to do with like big building. So, still obviously can really benefit from that on the longer term. Kind of see how this price action shakes out in Nucor. If you can get consolidation around this level, that might be something interesting to look further into as well. Let's take a look at a firm as well. Whoops. Oh, actually, no, you know what? I want to look at LifeMD just quickly, because I think HIMSS is taking the bid to the upside. It was down earlier. Yep, you're at 0.88%, trading at 51.83. And what happened with LifeMD, and you remember we had a little bit and then we got out the next day. All right, this is taking off a little bit. You just had some issues really with earnings, which I was kind of concerned about, that there was not much conviction, right? The earnings were solid. We went over this yesterday. It has had a hard time getting back up to this high volume high here, which makes me a little bit nervous for the company. I think there is, at least in the near term, there is a really nice runway for LifeMD, again, with health solutions for women and, of course, the adoption of Medicare. This is one we'll be watching, but the price movement seems a little bit weak. It really has been flipping. I mean, you could see the massive wicks over the past, 3 days, really 4 days, right? So that's a little bit tough. Additionally, with Oscar as well, they had decent earnings. Now, they had a lot of debt too, and this is doing the same thing, right? Like very big kind of ranges that these kind of healthcare equities have been trading in. Now, it's a little bit different. They're doing insurance, right, versus something like LifeMD, which is providing services. I was taking a look at Oscar last night, and if you kind of compare it to how like United Healthcare trades with their gross profits relative to what they spend, right, to do operations, which is going to be really like medical expenditure, they seem like they have a better movement to the upside, Looking at some Monte Carlo simulations for Oscar, that's looking at like an average kind of price, like right in the middle of the curve there of like 33, but the debt is there, okay? And it is something that United Healthcare doesn't necessarily deal with. So that can be a little bit of, no fun in the party. So folks, stay right there, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. We're watching the end of the Tom O'Brien show. Man, it is hot in here. Sorry about that, guys. I think I'm losing my mind here. Okay, yeah, Kamiko up 3.15%. UUU doing okay as well. UEC ripping on that news. To Jambalaya, I know you sent me a DM on it. For some reason, that's 404ing. But I think it's talking about, yeah, that's right. I mean, looking at kind of the URL tag, it says nuclear's back, but uranium supply isn't. Yeah, I mean, I think there's a lot of waiting right now, right? You had this weird kind of dip in spot price of uranium, really due, let's see here, really due to all the fear of uncertainty, and that can recover. Now, it's been on kind of a decline since about November, but you are starting to see some movement back to the upside. You really did have a low here at about $61 on spot price. and you're trading right under 70 right now. So there's been a nice march upwards, really since about the middle of April as well. And I want to look at the long-term contract on it. Yeah, so I mean the long-term is at about $80 right now for uranium. This will, march right upwards, and then as that happens, and these prices kind of stabilize out at a little bit higher levels than something like $60 on the spot price, then you're going to start seeing companies like UEC really start developing newer contracts, right? And these are going to be longer term, and they, of course, this is a good time for companies with very good cash, maybe not a lot of debt. UUU is well positioned in some ways like that to buy uranium, at a cheaper price, right? So they can kind of make more money when they sell in the future, and these companies know that kind of stuff, right? So still, loving what's going on with uranium right now. Folks, thank you so much for joining me. I hope you all have a fantastic weekend. We'll see you Monday morning with Tommy O'Brien for that morning market kickoff. Take care, put your feet up, relax. We'll see you then.